weekend all. I'm Epstein of Linn & Associates with your weekend edition of your SPDR ETF wrap-up, and this is for Friday, February 12th, 2021. So on the weekend edition, we look at the weekly chart to get the bigger picture of what the market is doing. For the week, we're going to start off next week and we'll be through with the impeachment trial very quickly. I noticed that the defense of President Trump, I think they had a 3-hour defense instead of using the 16 hours. They were in a question and answer period that I saw last. I don't know when it'll end. They're not going to do anything on the Sabbaths. And at that point, what they'll do is, I think Sunday they'll be back. They could even vote then, and this could be done one way or the other, what is ever going to happen. After that, quicker rather than later, it's going to be on to the COVID-19 relief bill, and right behind it, you're going to hear a lot of talk about infrastructure, which is going to take a lot of finagling after they spend this money, whatever it's going to end up with in the COVID relief bill. It does not look to me as though it's going to be partisan, so that may sit poorly for getting something done on the infrastructure. On the other hand, country needs it. We'll see just what's going to happen. Of course, those that look at how much we're spending are scared and they don't want to do it. Again, I'm going to repeat, within certain restrictions, it now just takes a simple majority in the Senate to get it done. We know the House is going to vote to spend money like mad, and now it's going to be all about the House, and you can get a lot of things done. Not everything, but a lot. So that's what we see. We have President's Day coming at us on a Monday. It'll be subdued trading. We're in the Lunar New Year. That creates a certain amount as well. But yet, we have all these markets to deal with. So when I take a look at the markets and I look at XLK, these are new all-time highs. Nothing short of that. So that's where you're at. Look at how this market has taken off in the course of almost a year. This was a year ago, March. There is something in life that we call KISS, keep it simple, stupid. And I'm going to show you something that would, I think, help you maybe. We can see visually what that is. I created years ago when my son was in his teens, early teens, a thing called a swing line, so that I could sit him at a dinner table and say, you tell me the trend of the market. Do you remember when we all drew lightning bolts? Men did, at least, you know, us guys. Now, and I'm not cutting out you women. I know a lot of women that could beat the heck out of me. I have a niece that was in the Army. Trust me, I don't want to mess with it. But we did that. I'd blow up tanks. I remember all that. Okay, well, that's what this is. But really, every time you turn on financial TV, what do they say? Higher lows, higher highs. It's in an uptrend. Lower highs, lower lows in a downtrend. Well, I created a tool so that you put it on a chart, you don't have to draw it, and it looks at 5 variables. It looks to see the prior day, the prior bar on a week. Did you make for this week a higher high, a lower low for the week? Do you have an inside week, an outside week up, or an outside week down? Really simple. And it draws the line accordingly. And lo and behold, all of a sudden, visually, instead of looking at a chart like that, you can see where the break lows are, and you can say to yourself, this market's in an uptrend until you take out 126.12. That's part of the keep it simple, stupid. Here's the real thing. It's a secret. Don't tell your neighbor. As long as you're over the 18-week moving average of closes, if you use an average and you say, as long the market over that, I have an upside bias. That is a filter on the work I'm doing. The way I teach, if you're over it, you're not looking to be short. If you're under it, you're looking to be short. So it's a filter of your tools. So if I'm getting a sell signal above the 18, I'm not looking to take it. It's saying I'm neutral. Well, in this market, you've got higher lows, higher highs. You just keep them going. That's bullish. It got a setback one time over here, and ever since then, it's been coming back. Okay. The other part of the technique is understanding what a Bollinger Band is. Do you understand it? It's an algorithm. And the algorithm says that 95% of the time the market's going to trade within these bands. Simple, clean, concise. You don't want it 100%. Why put it on the chart? You don't want it So narrow that you're always getting over it. You want it to be able to kiss it. Again, that kiss word, and see what it does. Well, when I put it on here, there's that kiss. So when the market hits it, I think the pros take some money off the table. As long as momentum is locked in and embedded. Embedded means it's converted. It's locked in from something. Markets drift around typically in slow stochastics between 80 and 20. But when they get bullish, real bullish, both numbers called a K and a D line will go over 80. When they go over 80 until the red line, the K line, closes back under 79, I stay with the bull camp. Therefore, on this chart, the bias has been up, the swing line has been up. When you hit the upper Bollinger Band, you're out waiting to buy again. Now, you're liable to say, I'm just going to hold it, it keeps going. I wish it was that way all the time, but this is how this chart has been. What can I tell you? PAVE is more realistic, all right? This is that stock that I talk about, infrastructure. And I latched onto it for a reason. I read the paper. Everybody's talking infrastructure. Is there an infrastructure ETF? This may not be the best one, but I liked it. And it's overbought. It is not embedded. It hasn't even begun the process. So you're in an area between here and the upper Bollinger Band. You're going to probably find some resistance. It had a contra-trend rally that converted to an uptrend. I don't want to see 2213 taken out yet, otherwise more consolidation. But nothing unless you close back under that 18-week average is going to turn me bearish. In XLI, you had a break in an uptrend that worked itself down to the support. Gee, have you not stayed over that 18-week average? Are you looking for sell signals? Nope. You're looking for buy signals. That's what I'm trying to explain. Here you lost the embedded reading, but the market made its way back to the line in the sand, that 18-week average, neutralized itself. It's like game on again. You pushed the button on a pinball machine. You tilted it when it got under it. Now you pushed it, it's game on. Will it re-embed? Am I going to get new signals? The energy sector. Well, since you got over this 18-week average, if you had a bullish or a bearish bias. That is the point that I'm making with you on the charts. Charts are roadmaps. And there's a north, south, east, and west, right? Well, there's a bullish and bearish if you think about it on a chart. You have to decide what your line in the sand, the demarcation point is. It's right there for me, the 18-week average. QQQ. Embedded over the number, bias up, higher lows, higher highs, hit those numbers. I tell you, I think the pros are taking some money off the table. Emerging markets, right here, breakout from the upside. You got back and stayed over that 18-week average again. Have you really gotten away from it? No. Another way to look at that market. Gold, it has been now since back here. Why are you fighting with it? This market lost its way. It began back right here. It started fighting, and from there it got under that 18-week average. You climbed and you gave it up. From that week, which was January 8th, I'm getting so many people. Is this the time to buy gold? Is this the time to buy gold? Where's your bias? Okay, I'll let you do the thinking. As goes gold, goes the gold miners. I mean, the gold miners are only worth what that gold in the ground is, right? Wouldn't you agree? That's what their leases or the land they own. So you got to pay attention. When you get a bull market going, then it's a question of how many ounces can they produce, blah, blah. We know how that game works. You're oversold, the bias is down, and you're not trending. Silver. Higher lows, higher highs. You got a bull market on the weekly charts. What did you do? You got over the upper Bollinger Band because of the Reddit boys. Okay, I'm going to squeeze it. I get it to 27.98 and it falls right back to 24. A lot of pain. In silver, each dollar's $5,000 on a futures contract. So that's painful. And SLV tracks this. I mean, you just lay them over each other. They go back and forth. But the trend is up. The bias is up. But you're at a resistance point. I understand why the market stalled there. TLT. I've been saying interest rates creepy. It's what I did for a piece on TikTok for Bloomberg in an oral recording about 3-4 weeks ago now. And I said, you've been staying under this. You're going to get the longer term keep creeping. It's going to fight with the Fed. You tell me what it's doing. That's your 20 plus right there. Last, the euro. The euro was the trade where everybody thought, including me, it would go higher until I saw it was hitting the Bollinger Band and got under this number. Right there. When it got under that, I backed away from the market. If you're a subscriber of me, am I saying the wrong thing? If I am, come slap me. And I'm just watching what the market is doing. Now the market got back. The bias is up, but you've been in a downtrend. I need this market to straighten itself out. It hasn't on the daily, and it has not on the weekly charts. So if you like this type of idea, the simplicity of some of this, maybe you want to bounce your trading ideas off me, and there is a way to do it. Each weekday, I start recording at 8:40 in the morning. 8:40. That's 10 minutes Chicago time after the market opens. I want prices. I want the algos to get into the market and all. And I start going over 40 some odd charts for you. I'm going to start you off with the news of the day, what has come out so far for European, the Asian news, what's coming up in the U.S. news, what has come out, the reaction to it. I cover now 40 charts. I'm going to update this and give you all that I'm doing. I'm forever adding. I added THCX, PAVE is there. God, I can go on and on. There's just, I just keep adding them to it. DWCPF is there. There's quite a few that I'm adding all the time for you. But 40 is about as what I want to do. I'm not looking to be on that the recording over an hour. And speaking of the recordings are done Monday through Friday morning. So when I do them, they're about 20 minutes a piece on average. They come out, I post them, you get to see them. I have been very lax in not doing a live webinar for you, and I know it, and I said I would do one, and I'm to blame on it. I am not to blame. I'm putting together the sophisticated course I am on Bollinger Bands and slow stochastics that I'm calling my enhanced version. I'm assuming you took our regular charting course. This picks up where that left off for a more sophisticated viewpoint on those two markets and how I would recommend using them in the marketplace. But to see these videos, it's simple. $8.95. You can buy it once, you quit. Okay, that's fine. Most people stay with it. That doesn't mean you're going to be that. You know, maybe you quit for whatever reason, but if you like it, you'll stay with it for a bit and see if it fits into your trading. You get the combo edition where I put out the futures at 5:40. This I recorded 8:40. They're posted shortly after, and you get a feel for what they're both doing. Do you have to look at the whole video for 20? No, I do it in such a way on the website where I break everything into the segments you saw. There's a scroll bar. Just drag on it, lights up in big letters, tells you where you're at on it. But there's more. Go to our website under research, give it a try. What do you have to lose? It tells you all about it, and you sign up there. I'm Ira. Have a great weekend. See you come Monday. Take care.